In this video, I'll show you how I track sectors to trade based on their moving averages. We use near-term moving averages, 20-day in contrast with the 50-day. We use exponential moving averages. Okay, so you can see at the end of the running of the code, this is the output I get. Colors for the overall stock market and the bond market and the various sectors within the stock market. For example, the stock market looks like light green, the bond market looks like yellow, transport sector within the stock market looks like yellow, and the materials sector within the stock market is strongly bearish in red, and communication services in yellow, and energy is in orange. And there is one other color which I believe is the magenta. You can see the insurers is in magenta. So let me explain as to what these colors mean. Okay. So basically there are 6 levels. So we have green, which is the strongly bullish, and then we have the light green, that is, it's still bullish, but it is not very bullish. And then there is also yellow, that is moderately bullish with a pullback, deep pullback. Okay, the light green has a lighter pullback to a 20 EMA. The yellow has a deeper pullback of the price level to the 50 EMA. Normally, when you have a bullish condition persist, you have the 20 EMA level being above the 50 EMA. Okay, and for the really bullish case, the price should be above both these moving averages. Okay, so the simply rules of this coding for the color coding scheme to track the relative bullishness and bearishness levels. I will tell you the rules. If you want to implement in your own, you can do it. Okay, so if the price level is above or greater, at or above EMA 20, and EMA 20 is at or above EMA 50, then you return green, very solid green. Okay, so if this condition did not match, then you fall into the next condition, which is we call as else if. If EMA 20 is greater than or equal to EMA 50 and price is greater than or equal to EMA 50, then we return light green. So this is a bullish feed pullback to the 20 EMA. Okay, and if these two conditions did not match, we fall into the third case, which is else if EMA 20 is at or above the EMA 50 and the price is less than EMA 50, then we return yellow. Okay, this determines it's a deep pullback to the 50 EMA level, but the 20 is still above the 50, which signifies the overall bullishness is still maintained, but with a deep pullback. Now the remaining 3 colors are going to be all in the bearish shades. Okay, they all determine bearish conditions in various levels. But in order to differentiate the level of bearishness, we again use color coding within the bearish signals. So the very first bearish signal is that else if the top 3 conditions did not meet, then we are falling into this fourth condition. If the price is greater than or equal to the EMA 50, but the EMA 50 is greater than EMA 20, this means the faster moving average fell below the slower moving average. That indicates bearishness, but the price is still above the 50 moving average. Okay, so what can happen, basically it can so happen that the 50 can still support it, and then it may drag on for some time, and if it can either start to turn back up or it can get further worse. So but it is an entry into the bearish territory basically. Okay, so that's why it's coded orange. Okay, and then if these 4 conditions did not meet, then we look for else if EMA 50 is greater than or equal to the price and the price is greater than or equal to the 20 EMA, then we think that there is a bearish condition that has set in. It is not the most bearish, so we return magenta, which is closer to the red. Okay, and the next level is most bearish. If the 50 EMA is greater than or equal to EMA 20 and EMA 20 is greater than the price, then we return deep red. Okay, this is the worst situation where the 20 EMA fell through the 50 EMA and the price fell through both these EMAs and price is below 50 as well as 20. So in that case you get red. That's how the sectors are coded. So from our working mechanics, that's how we do. Okay, we have the price level and we have the moving averages. Okay, and we see where things are, which of the 6 conditions the charts map to, and then the color is coded by the side of it. So you can see the stock market is kind of light green, bond market is yellow. So from our interpretation, what do we know? If it is light green, we had a healthy pullback to the 20 EMA. If it is yellow, we have a deep pullback to the 50 EMA. But we are still bullish because we have the moving averages doing fine. It is only the price that broke through the 2 levels. In one case, it just broke through the 20 EMA, so it became green to the light green. In here, it broke through both these moving averages, so it got into the yellow. It is a deep pullback. Okay, but you can still see that the 20 is well above the 50, so that is considered a bullish. It is in the bullish taxonomy. All right. Then you can have a bearish taxonomy, like material sector within the stock market. You see that the slower moving average is above the faster moving average. That is not good for a long position. It means the stock is losing value. So you can see the price fell through both of these and it is in a deep red territory. Okay. And then we have, as I explained, how do we return orange? The price is above the EMA 50 and we have the EMA 50 above the 20. So that is the energy here. Okay, that's in the we already entered into the bearish taxonomy territory. Okay. So with that said, you understand how we use these moving average plots to map to the relative colors. Okay. But when I am going to be day trading, I am not going to be looking into this. I just want the colors. Okay. So I generate another plot that is simply the heat map that shows the summary with what do they mean by that. So in here, when I look at materials, strongly bearish. Communication services, moderately bullish. Stock market overall, if you want to call SPY or something like that, the ETF, that is, it had a healthy pullback. So that's what is its current status when I ran it. Okay. And you have the bond market that had like a deep pullback. That is in the yellow territory. The technology is in a healthy pullback. The energy is in a moderately bearish. We just entered the bearish territory on energy. And insurers, for example, is bearish. The next level will be a fully bearish. Okay. The retail is very strongly bearish. Now, in your mind, what's the point of all these colors? Okay. So basically, if you are a day trader or you are a positional trader, you may hold a position for a few days before you turn it around. You may sell a put on something that you think is going to go back up, or you may buy a put on a sector that you think is going to go down instead of shorting, for example, if you are an options trader. Okay, or you could be a very exciting, risk-taking one. When you see that a sector broke through the moving average to the bottom, you think that, hey, this is going to bleed even more. Let me short this. Let me short 500 shares of it or 1000 shares of that kind of thing, which is in that state. But now, which ones to actually trade? So the best ones are ones that, if you want to do a long position, you don't want to already buy into something that is in a deep green. You want to see something that pulled back to a healthy level and then you want to play for the further uptick when the market recovers. Okay, for example, today the market is down. So yesterday this was in good, I believe it was in dark green, and today it has turned moderately green. So if I believe the market is going to go back up, there are no guarantees. It can go worse. From here it can turn yellow, and then from yellow it will go to the orange. From the orange it can go to magenta. From the magenta it can go to the red. If you, after you enter a trade, this kind of thing can happen, this kind of state change, right? But let's say you believe the market is going to be fine, then you may want to buy and you want to go into a long trade. You either want to be buying the lighter green one, or if you are a little bit more exciting guy, little risk taker, you may want to take the yellow one, because this already powerfully pulled back to the 50 MA, and you want to play for even a bigger spike back up. Okay, but remember, buying here has a lesser risk compared to here. Okay, because this can turn orange if market further goes south, whereas if market goes south from here to here, it will be a yellow, right? Yeah, the light green to the yellow state. So from dark green, when the market turns bearish, dark green, it goes to the lighter green, then it goes to the yellow, then it goes to the orange, then it goes to the magenta, then it goes to the red. That's how an asset will traverse. And vice versa, it can start with the when the market recovers, let's say very strong bear market was there, and from there maybe the Fed made a very good announcement that they are cutting 50 basis points, and they say some bullish things, economy is great, etc. Then every sector is going to do well. So you may want to find something oversold. So you may want to buy something really that sold to the red, deep red level. So you expect that to go back up to the deep green level. You will make a lot of money, right? Because you bought it at the lowest and then you sell it at the highest, relatively speaking. But in a normal day trade situation, or normal, things are humming along fine with some moderate pullbacks here and there, you want to buy it at the pullback level and let it play for a few days, and then close the position and take your profit and move on. Okay? And if on the short side, if something broke through the moving averages to the downside, then you want to look for, if that sector is having a catalyst of further pulling it down, maybe it is something about interest rates are increasing, for example, and you are in a real estate that just broke through the orange. Okay, then it is going, we know if interest rates are taken up, real estate is going to be affected. Then you expect that orange to completely turn into red, so you go short. Okay, but I'm not saying that is true today. I'm just saying a hypothetical trade. And when I say all these things, nothing is a given in Wall Street. These are all some practices. I have just told what worked for me. Okay, you have to find what works for you. But in general, if you want something to go back up, you don't want to buy something that is already at the peak. You want to buy something that it's bullish, but it pulled back to a healthy level, and then you want to enter there. Okay, so you can see now various sectors how it is. Okay, before we finish this video, the stock market is slightly pulled back. Bond market has deeply pulled back, still bullish on both. Okay, and this is transport that has deeply pulled back to the 50 MA level. And the banks alone, it could be regional banks, everything together, they are in red territory, very strong bearish. And the industrials, they are in moderate pullback. The technology, I'm sorry, again, this is a little confusing here. The header is always above the picture. So the materials are bearish, the communication services are moderately bullish, the energy is moderately bearish, banks are bearish, strongly bearish, industrials are moderately bullish, technology is bullish and with a healthy pullback, consumer staples is strongly bearish, utilities are bullish with a healthy pullback, Healthcare is strongly bullish, and consumer discretionary is moderate bullish and deep pullback. Real estate strongly bearish, and semiconductor strongly bullish. Financial strongly bearish. Biotech strongly bullish. Pharma bullish, healthy pullback. Insurers bearish with a bearish rebound. Retail strongly bearish. Defense aerospace moderate bullish with a deep pullback. And gold, silver and copper all are in bullish but healthy pullback. Okay, this means what? They all achieved a higher level of price and then they fell back to the 20 EMA and getting a support around it. It broke through that. Maybe it's just still above the 50 EMA. That's what it is. So we expect, okay, chances are, if you ask me to bet, it will, from this level, it is likely to, kind of start to gain, okay, if the market is turning bullish for the gold and silver and copper, okay. So because it pulled back to the healthy pullback levels, but there is also a chance that it can go to the more deeper pullback to the yellow. It can also happen, okay. So it all, market is very dynamic, things move. So you want to run these kind of programs right before you take a trade to understand where the sectors are, because if you run the same thing 2 hours later, colors could change, okay. So I have another program in development where I look for state changes from one color to another, and you can use your imagination to automate, to trigger your trades, right? So hopefully it kept you thinking, and you want to probably develop your trading arsenals. And these are some of my techniques I wanted to exchange with you. And with that said, caveat again, disclaimer, please trade at your own risk. I am just sharing some of the techniques I follow. It may or may not work for you. Okay, you have to experiment, back test, and prove that the techniques work for you before you implement anything. Again, this is a snapshot when I ran the sector maps just some time ago. That is November 6th, 2025, in the morning time. Okay, so it may change from time to time, so you cannot take this as an absolute reference. I am just showing you the technique. Do not trade with these colors today, because these colors, when you trade, may have already changed, okay. But this is a technique for you to quick reference which one to pick to trade, okay. So in the morning, market crashed, let's say, to a very support level in the Dow. Then you see in the afternoon it is starting to recover. Then you buy the light greens and the yellows to start to gain some. Okay, maybe you are a day trader, you may end up closing the position before the market closes, or you may be a positional trader. You may hold it for a couple of days. Maybe the next day it gets even more bullish, and then since you bought it at a pullback level, you sold at a nice profit. When you sell it after a few days. So these are all techniques that you can use to increase your profits as a day trader or a positional trader, or even a swing trader knows when to reverse your strategy, right? You can go from bullish to bearish to bullish, etc. So this kind of technique can help you. So hope you found this video useful, and if you liked, please put a like and also subscribe to my channel. That will encourage me to share more of my learnings and my techniques that you guys can actually experiment with also. Thank you. Good luck in your trading. Bye bye.